the aspects of logistics, of basically getting out there and being able to operate, are all moving forward very quickly. So 3 months is a short time, and we are getting very close to it. So it really does start to get exciting.
Hello, you're watching Proactive. I'm joined by Sunda Energy CEO Andy Butler. Andy, very good to speak with you today. Could you tell us more about today's announcement and its impact on Sunda's operations at the Chuditch field?
Yes, Stephen, nice to see you again. It's been a little while. We've been working very hard behind the scenes to pull together a lot of aspects around drilling the Chuditch well, but particularly the funding, and that's what this morning's announcement was all about. And thanks to everybody for their patience whilst we've been working on all these aspects. So I think the first thing I'd say is it's around the materiality of the Chuditch field. This is a significant asset, and we have gone from a position of seeking funding and having uncertainty around that asset, and to having the funding in place to drill the well. And with a 30% position going forward, that's a very material piece of a large gas field. And maybe put that in context. The engineering work that we're doing based on the feasibility studies that we announced a little while ago, following the MOU with the ministry and with TIMOR GAP, there has illustrated that this has demonstrated clearly to us we can do what we said we could do, which is about 300 million cubic feet of gas per day in the future, which is about 50 million barrels of oil equivalent, and net to the new equity that we'll have on conclusion of the farm out part of the deal, that's about 15,000 barrels a day of oil equivalent. So really material. And what this funding enables us to do is to build on that asset, to build a position of the company, and to take that asset forward quickly and in strong alignment with the government, which is a great aspect of it. I'd say, Stephen, that there are several aspects to the funding that have been announced. The first is the farm out to TIMOR GAP itself. We are very happy with that. We have a very good working relationship with them as our government partner. We're very much aligned in terms of what we want to do when we see the value in the asset, and we want to do it now. Others we've spoken to have wanted to take a bit longer, to take different views on development pathways, etc. Whereas Timor-Leste as a nation, as a government, along with ourselves, want to expedite development of that asset. So that alignment is very strong. And then the second piece is funding. So we've announced a convertible loan note structure this morning, bringing in $9 million with 3 institutional investors, which enables us to, again, retain a significant piece of the asset. The intent here is to use those funds to drive growth. It's not a convertible that is there to keep the lights on a company like ours. It's there to take us forward, to help us mature a very material asset, as I've been describing. And as we are really just probably about 3 months away from drilling, we're going to be going into a period of excitement around the company and our plans. And so on a upward trajectory, which I hope we will be on, it's a way of actually mitigating some of the dilution required, or that's a consequence of bringing significant capital into a company of our size. So I think that's some sort of thing to consider. The institutional investors involved are also, I think we'd say, quality investors. They do take an interest in the business and take, I think, a reasonably long view of the business. There is quite strong, very strong anti-shorting language, forward-selling language, etc. within the agreements. So a lot of the things that people worry about are mitigated within the structure of what we're doing. And we see it as an instrument that fuels our growth rather than creates any toxicity.
Andy, how does this change Sunda's interest in Chuditch?
So our present working interest is 60% on the asset, and paying 80%. So we will go down to a 30% working interest, and we will be paying a much smaller piece of the well cost through to the end of this year. So basically, we'll be paying 28% of the well costs, which includes the element of carry that was there previously for the state partner. So 30%, as I say, is still a very material asset, and a very material stake in this asset. And the forward, the value from it, the NPVs, the net asset values that we model are significantly greater, of course, many multiples of the size of the company. So still very material to us.
Andy, can you expand on the convertible loan agreement, please?
Yeah, so it's a $9 million facility. It comes in 6 tranches, a month apart. The first will kick in, first will be drawn down immediately after a general meeting, which is scheduled for the 12th of May, and for which a circular will be issued very shortly, distributed to shareholders, and which will be available on our website as well. And there's a lot of information in there, excuse me, around the convertible loan note and the structure of it. It's got there's a 10% financing fee on it, and then it's at a 15% price to 15% discount to a 20-day VWAP price. There are certain drawdown restrictions within it. Those are illustrated within the circular, just to do with sort of minimum volume, minimum price, and minimum market capitalization of the company. So yeah, it's all that information is there, and as I say, it is one that we see as a very positive instrument.
Andy, what approvals are required for the convertible loan notes and warrants, and when will drawdowns begin?
Immediately after the general meeting that I mentioned on the 12th of May. So what the authority, at the moment we have limited headroom, and we sort of committed earlier on to shareholders that we'd give them a vote on the structures that may be required. So that's what's happening. So once we have the authorities to issue the shares that sit behind the convertible loan notes, then we will start those drawdowns. So it will start from middle of May and be then on a monthly basis.
And the next steps for the project following today's news?
Well, now it gets exciting. This is what we have been, as I'm sure shareholders and others will have seen, we've been working very hard in our ongoing preparations for drilling the well. We had previously been talking about Q2, late Q2. It's now slipping into Q3, and that's really just to do with the operational schedule of the guys using the rig before us. So at some point, late July, I think is probably the most likely at the moment. We've been making a lot of progress in terms of environmental permitting. There's been a few announcements on that over the last week or so. That process is going well. The rig contract itself will be is very advanced, and we hope to have that in place very soon. All of the aspects of logistics, of basically getting out there and being able to operate, are all moving forward very quickly. So 3 months is a short time, and we are getting very close to it. So it really does start to get exciting from this point forward, and you'll be hearing a lot from us.
Andy, I hope you'll keep us updated on any progress. Thank you very much for taking the time today.
Thank you. Great to speak to you, Stephen. Take care.
And you, Andy Butler, the CEO of Sunda Energy.